Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 12th of September. I'm Steve Brice, standing in for Daniel Lam, who's in Hungary for the Chess Olympiad. There are three things I want to cover today: the presidential debate, US inflation, and the yen. So as far as the presidential debate was concerned, Kamala Harris recovered from a nervous start to more than hold her own, and she was even able to outscore and rattle her opponent, Donald Trump. Betting markets reacted accordingly, raising the probability of her winning the presidency from 52% to 56%. However, we know how fickle these measures can be, and therefore with 54 days to the election, a lot can still happen. After a strong start to her election campaign, her lead had started to wane slightly ahead of the debate. So let's see whether the debate and Taylor Swift's endorsement can arrest that trend. Looking forward, the key will be swing state polls, as well as any evidence that Kamala Harris is eating into Trump's lead on the key issues of the economy and inflation. So let's talk about inflation. So last night's inflation report came out pretty much bang on expectations. So headline inflation fell to 2.5% from 2.9%. Now, obviously, that's going to be music to Democrats' ears and suggests that maybe they will feel that the inflation problem is largely behind us. However, as expected, core inflation remained stubborn at 3.2% year on year. It was actually slightly stronger than expected on a month-on-month basis at 0.3%. Although it's important to note that the good news from that front is on a 3-month annualized basis, core inflation is still running at 2%, so that's in line with the Fed's targets. In response to this data, markets have priced out a 50 basis point cut and are now focused on a 25 basis points cut, which put upward pressure on the 2-year government bond yield, which jumped 12 basis points immediately after inflation data. So what does this mean for investors? Well, we appear to be in a bit of a holding pattern at the moment. For me, what happens in FX or currency markets will be really important. So the dollar index has stabilized over the past 2 weeks, which coincided until yesterday with a sell-off in risk assets. And on this front, the ECB decision will be important. A 25 basis point cut is expected from the European Central Bank. However, I actually think the key change in the past 24 hours has been dollar yen's rebound. Earlier in the week, dollar yen made new lows for the year and looks set to be challenging the 2023 December low. Now, given that the experience of the second half of July, the risk was that a break lower in dollar yen would be really challenging for equity markets. And so the good news is, for now at least, dollar yen rebounded, and this coincided with a rebound in US equity markets overnight. Now, while most people are focused on the Fed next week, which is of course very, very important, I think what the BOJ says and does is also going to be important for risk assets. Expectations are for the Bank of Japan to leave interest rates on hold next week when it meets. However, noises out of the Bank of Japan even this week are still pointing towards a trend for higher interest rates, which could ultimately put further downward pressure on the currency pair. For me, this is a key area to keep an eye on, as it will be important for the outlook for risk assets. That's all from me today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and I wish you a fantastic day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.